Welcome to Dragonfly Trading. I hope everyone is having a good weekend. This video today is going to be on Bitcoin and the DXY. There's been a lot of confusion on whether we are in a bull run, whether we're not in a bull run, when we will be in a bull run. Today I'm going to present this in an easy as I can way. I am an Elliott Wave trader, and I will try to present the Elliott Wave counts that I have in the easiest way for the people that don't understand Elliott Wave. Remember, this is not financial advice. This is just the way I see the market. We're going to start off on the weekly time frame. And what I want to emphasize on the weekly time frame is this indicator here is called the Trader's Dynamic Index. It is my go-to indicator. It is what I base basically all my trades off of. There is a free strategy video in the link below and on my website, Dragonfly Professional Trading. It is free, and I explain this indicator in detail. So what I want to show you is when we were in this 20K bull run, as soon as we broke this blue 50 line on the RSI, is when we headed up into the bull run. And as you can see, we came up into the 90s, came back to the 50s, 90s, 50s, 90s, 50s. But we never broke the 50 line. That is an ideal bull run. You do not want to break the 50 if you want to remain in a bull run. Because as you can see here, once we broke it, we back tested it, and we went into the abyss. Over here, we attempted to get up into the 90s, but we broke through the 50 and again went into the abyss. Here, we came up and broke the 50, and now we are up into the 80, and we still have room to go up into the 90s. Also, what I want to show you on the weekly time frame is from this pivot to this pivot, we have bearish divergence. Can we go up and wipe this out? Yes, we can. All we have to do is get up into the 90s and get above this top, and that bearish divergence goes away. But it is something to pay attention to, because if we don't get above and break it, eventually this is going to play out, and we need to hold the 50 line. Moving down to the daily. On the daily time frame, from this pivot to this pivot, we had bearish divergence. As you can see, big bearish divergence. And we also have it here. Something to pay attention to. Okay. There's been a big debate about what count we are in. Whether this is an ABC flat, a 333 WXY, etc. The big debate is whether this is 5 waves or 3 waves. Well, if you start off with 5, you have to end with 5. So let's think about that. If this is 5 waves, the only thing that starts out with 5 waves in the correction world in Elliott Wave is a zigzag. A zigzag does not come this low. Usually a zigzag will come to the 0.5618, and carry on with its other 5 waves. It looks like this. Zigzag. So, can I make this 3 waves? Yes, I can make this 3 waves. But it looks like a beautiful 5-wave count. So what do we do? Well, I've come up with an ulterior one that does not, one that fixes this problem and allows this to be 5 waves. Okay. I know this looks confusing to the people that don't understand Elliott wave, but I'm going to explain it the easiest way I can. So let's start over here. So we came down in 3 waves, which gives us our blue A. Then we went up in 5 waves, which gives us our lower degree yellow A. Then in the middle, this is your zigzag. The yellow count here, A, B, C in the middle. The B wave of the zigzag is where the flat comes in. That allows for 3, a 3, and a 5. And this allows for 5, flat in the middle, 5, bringing us up to the blue B wave, and back down to C. Now this is the bearish view, and there's always a bullish view. But this count solves the problem of the debate over the 5 waves. Can it still be 3? Yes, it can still be 3, and we get the DXY in the middle, and we come down. But this alternative count solves the problem of the A being 5. So when will you know? Well, if this is an A wave down, and we're going to have a B wave up, we cannot exceed this 1.382. We can wick up into here, okay, but we cannot come up into this 1.618 and close candles up here. That cannot happen. Once we start crossing over and closing candles above this 1.382, this count pretty much goes out the window. And I would say we're going. Take a screenshot of this if you don't understand. Save it for later. Now we're going to get into the bullish view. So the bullish view is basically that this is a 5, wave 1, a 2, 3, and we're on our way. So basically, the correction really ended here. This is a wave 1, a wave 2, and we're in the middle of a wave 3. And we're going to all-time highs. This is on a lower time frame. So originally we had our channel like this before we broke down here, because we were expecting if this was going to be bullish, we would have a wave 1, a wave 2, and the wave 3 would break this channel. That did not happen. We came down for a correction that overlapped here. All this overlap, I don't like it. But it doesn't mean that we cannot turn bullish and this is going to all-time highs. So when this happened, I moved my channel like this. Okay, so now we have a wave 1, a wave 2, and this wave 3 needs to break this channel. We need to come out of here. If we come back down and test this channel down here again and overlap this wave one, I do not see this as a bullish count anymore at all. I see it as corrected. I don't even see how it could become bullish again. I mean, there's not a 1, 2, 1, 2, 1, 2. It just, no. We need to break out of here. Come on up, make our wave 3. Our wave 4 usually tests the channel, and then we go up for a wave 5. Let's move in a little closer. So right here, this white line is the top of the wave 1. Okay? In Elliott wave rules, move back one to show you. In Elliott wave rules, this wave 4 cannot encroach on wave 1. That's an invalidation. So if this corrects down and encroaches on wave 1 here, then we no longer have a bullish count. So we need to stay out of that wave 1. So the internal count is 1, 2, 3. We're running flat for 4. And we're either done with 5 or we're in wave 4 and we have another 5 to go. We're in this wedge-like pattern. I have it drawn as a wedge. I do not see it as a diagonal for the Elliott wave. The reason I do not see it as a diagonal because this wave 3 is bigger than this wave 1. Because the actual wave 1 ends here, and this is a flat. So we are in some type of wedge, rising wedge pattern that usually breaks to the downside. So say we make this correction the way I see that it's going to go, and we make either a running flat or we make an expanded flat. Come on down here. We still will stay out of wave 1 territory. Now, how can this turn bearish? Well, we make this correction here, and then the bulls have their chance, and they give us a 3-wave up. And then they give us another 5-wave down. Then they have another chance, because we're still not in wave 1 territory. Right here, 382, the 0.5, 236, these are the areas that a wave 4 likes to correct. And then we kick off again, and we get 3 waves. And then we get another wave down. Now we are in a down. And we can't pull out of it. The sellers win, and the buyers lose. That's how it can happen. What I expect to happen, my bias is that this is either done, and we are going into the bearish view, or we're going to come down for this 4th wave, stay out of wave 1 territory, and move on and go into a bull. The DXY. The DXY and Bitcoin have been inverse, meaning that when the DXY makes a down move, Bitcoin makes an up move. When the DXY makes an up move, Bitcoin makes a down move. Why they are inverse like this right now, I don't have the answers. There's many people that have a bias on that. I don't really have one at the moment, but it's definitely clear that this is happening. I have my screen split with the DXY on one side, the Bitcoin on the other, and all the way down to the 15-minute, they are inverse. Now remember, this line here is not showing the wicks. It's just showing the close of the candles. So here, we'll just use this one example. It dumps, we pump. It pumps, we dump. So to go over the DXY, right now, we are in a 1, 2, 3, 4, 5. Let's move in closer. Let me clean this up a little bit so you can see. I know this is very confusing to the people that don't know Elliott wave, but I will try to make it very clear. So I believe that we are in the 4th wave, and we had a 3-wave move up for the blue W, a 3-wave move down for the blue X, and at this point we can get a 5-wave move up for the Y, or a 3-wave move up for the Y. Now there is an alternate count. It actually was not my idea. It was my mentor's. Some of you may know him, Schuyler Edwards. We could be in a triangle. With that said, this would be an A, this would be a B, we need the C, we need the D, we need the E. So either way, whether we're in a triangle or we are in the WXY, our next move should be up. So if the DXY and Bitcoin are inverse, then the next move for Bitcoin is down. If I am correct about this count. I hope that this video helped. Let me know in the comments what you think about the count that I presented. Let me know if you found this video easy to understand. The likes and subscribe is very appreciated, and I hope everybody has a wonderful weekend.